Welcome back to another episode of the Blockburner Podcast. I'm your host, William, always here with your co-host, Iman.
What's going on, man?
And on the sticks, we got TJ.
Hello.
And finally joining us for the first time, we got ALDunlap, the founder of NetNet. Thank you for joining us, man.
Hey, guys. Super excited to be here.
Yeah, man.
Yeah, it's really cool to have you. We're deep in our Robinhood, escapades, I guess. Yeah. We interviewed a couple of founders, Simple Farmer being one of the bigger ones who kind of definitely struck a nerve within the ecosystem of Robinhood, with stonk brokers. And, once we kind of discovered your project, it stood out to us for a lot of reasons. Mostly because you're bringing like a whole new interpretation of like RWA angles to the market, right? Obviously RWAs are a big deal, tokenized stocks, tokenized commodities, whatever, right? That list of RWAs will expand over time. But you're bringing like an angle that's familiar to us, right? The gaming space.
It's my jam, dude.
It's definitely our jam, and it's something we haven't really seen anybody else in the space kind of tinker with. So that's what piqued our attention. But you're also introducing something that's even potentially bigger than that, right? This prelude to what it is Net is, this reference to Olympus DAO, that is something we actually missed. Like if you've been following our channel, we've been doing this since 2019. But we got kind of sucked into the vortex of like the metaverse around 2020, 2021 in Decentraland. So we missed a lot of like the DeFi craze, like things specifically like that, right? So a lot of what Net is built on is rooted to that. So if you can, just we want to kind of start things off there for context, not just for ourselves, but also for our audience here who maybe also wasn't around during those days, so doesn't understand those mechanics, right? But if you can't, just give us your background as a builder, as a founder, because there's a lot of buzz surrounding your involvement with NBA Top Shots. People in our community keep like poking us, like, hey, ask them, like, what exactly did you do? Did you hit out Michael Jordan to get those? Like, what did you do with Top Shots? And then how did it get you?
I saw some people being like he's the only person. No, so Dapper Labs is obviously like a big company. When I joined, I was one of the first software engineers sort of building out the Top Shot protocol. So designing it, building it, bringing it to production, then ended up working on it for a long time, helped scale it, all that good stuff. So it's a little bit different than like what I'm doing now. It's sort of like solo founder. But after Top Shot, I and a lot of people know this as well, I sort of just like migrated myself fully on chain. And I've been building on-chain products for the last 7 years, most of them not consumer facing, most of them on the market making side, looking for interesting arbitrage opportunities. I actually was running a lot of cool cross-chain ohm strategies back when ohm was really popular. So that was sort of how I initially got involved in the ohm ecosystem. But yeah, a lot of like NFT sniping, mint sniping, cross-chain arb, like different stuff like that, looking for, thinking more opportunistic. Ended up being a really big volume provider on a lot of the L2s around that time. Learned a lot, like never stopped learning, never stopped looking for an edge. But my roots are really tied to like consumer apps, and wanting to build that again is sort of like what's led me here. And I know there's a lot to dive into for Net. It's, like you said, there's like this gaming angle, there's the protocol that's like based roughly on ohm and Olympus DAO. And I'm excited to sort of touch on all of it and maybe give you guys a clear picture of how I see this all fitting together. One thing that I'll say, which has been interesting sort of like doing this, I very strongly don't believe in a roadmap. I'm sort of like an anti-roadmap builder. What that means is that like, if there's an idea that's worth building, then you should just build it. I see a lot of crypto projects sort of like giving you their like, hey, this is what we're going to do in the next year. Crypto is too quick of an industry to really have that outlook. I think that you have to be really responsive to what the market's telling you, what they're saying they want to play, what they're saying they want to buy, what they're saying they want to do with their capital on chain, and really sort of like push the envelope, build fast. And so that's sort of what I've been doing here as well. I've been exercising like what I foresee the building of tomorrow looks like, which is this sort of like rapid iteration, rapid development, prototyping, getting things into the public eye. And having a really strong community of token holders has given me a foundation of users on a lot of the stuff that we're building on the consumer side. And that's really important too. And that goes back to like why I think that building in crypto is really important, and it's a really great opportunity for people who maybe haven't built in crypto before to come in. And so I'm sort of trying to be like an evangelist builder too, being like telling my friends like, hey, you know, now is the time to get on chain. Now is the time to build cool financial products. And yeah, you know, I'll pass back to you guys. Hopefully I answered your question. I sort of went off the rails, but
no, you're good.
No. It's good to get your philosophy and approach as a builder in this space, because it's complicated. It's difficult.
Moves fast.
And it's difficult. You know, a traditional software developer, builder in the Web2 space, you know, you're probably, you know, you're feeling the same gravitational pull everyone else is, right? Like, why aren't you building an AI, you know, if you're a software developer, right? Yep. So it's because, you know, that's a much more like of a stable environment, I would say, building anything that's not Web3 rooted, because like you probably understand and we understand, like in Web3, everything is so fluid, right? Like what's popular today may not be popular at all, or even like have any use case like a year from now, right? And especially when you factor in like chains into all of this, it's like, you know, a year or two ago, Solana was basically the only environment you should be building on. But now that Robinhood has kind of entered the equation, obviously from a lot of builder perspectives, it's kind of shifting a bit. So I guess a good question is like, you know, what was the signal you saw in context of like Robinhood? Was it literally like as the chain went live, which I think was July 1st, I think, somewhere around then? Was that your signals? Like, okay, I need to get involved in this space? Or was it something before that? Like, how did you know, like, this is where the hockey puck is landing next?
Yeah, for sure. So, you know, one thing is I've been around, like, a crypto consumer often is someone who's, you know, following trends, buying tokens, that sort of thing. I feel like that's how you can define a typical crypto user. I've been a typical crypto user for a really long time now. And so part of my day-to-day is just like, hey, what are people talking about? What's going on? I think that's something that's been longer than Robinhood chain going live, is this sort of tokenized RWAs coming on chain. And that's sort of been like a long promise for many, many years, is like, hey, the financial rails of the future are all going to be on a blockchain. There's all of these benefits and advantages to doing that, 24/7 trading, like all these different stuff. And so I've been sort of like watching that and seeing more companies get involved, more people bring some of these assets on chain. And then with Robinhood chain, I feel like that opened the door to like the traditional crypto consumer being like, hey, I have maybe this long-term belief in how finance is going to be decentralized and how a lot of these assets are going to come on chain, but I'm a typical crypto consumer. I want to buy CashCat and I want to have an outsized return. And Robinhood chain kind of like married the two. And so I viewed it as like, okay, I've had these ideas floating around in my head about how, like, I agree that tokenized stocks are coming, like the financial sector is coming on chain, but that it's very boring. And like, this seems like the right opportunity to sort of like build towards what I see sort of like the future looking like. And so, yeah, all the bridges sort of like came together, and that led me here.
So I think it's a good time now to get into NetNet. And do you want to give us a high level view of what NetNet is, and then we'll get into, you know, the differences between that and Ohm?
Yeah, for sure. So I'll start here. So I think that a lot of people tend to view, I'll start with like high level Olympus DAO. Obviously it had this crazy ramp up and this crazy collapse, and it's sort of like nutted out where it is now. What Olympus DAO was very, very good at was creating an environment where people are excited to hold and stake your token. They sort of viewed it from the angle of like, we want to have this reserve currency, we're going to increase backing, this token will be backed, and like they wanted these two things to come together. I'm sort of viewing it from a different lens, where I want the products that I build to sort of like have the treasury grow faster than the token price is going up. And it's almost as like there's obviously very high emissions on the token, but there's also very high treasury growth. And so I'm trying to sort of find this right angle where I know that it's fun for the crypto consumer to buy and stake Ohm. I want to prove to them that I can grow the treasury at a really good rate and build really cool products on top of it, and deserve the multiple that we currently have. I think Ohm's long-term view is that like the multiple should go to zero. I'm trying to say like, hey, you know, look at a lot of traditional companies and their multiple to cash or their multiple to their like holdings. We at NetNet Capital should be deserving of a multiple if we're able to continue to grow the treasury. And so that's sort of like high level why and also, the own model is really good for an early stage token. I think that I am a believer in like the meme coin super cycle, and I understand why it happened, but attention flips so quickly, and so many of those tokens are they trend to zero over the long term, because they're so attention focused. And so like as a builder, I think that it's almost easier for me to have a token that has backing, so that like I can guarantee the holders like, hey, we've become so used to what was happening during meme coin season. Like everyone is flipping so quickly. Everyone has this, when you buy a token, like during the last couple of years, it's going to zero. You're just hoping to like get in and get out before that happens. I sort of don't want to play that game, and more so drive real value. That feels better. And I think it resonates more with like, there's almost like a new cohort of DeFi users that came into crypto for the memes. And it's now learning about DeFi, whereas before it was like people came on chain for the DeFi, maybe learned about like NFTs and memes after the DeFi. It's sort of like flipped. So I'm trying to like re-show them like, hey, we can build cool financial products on these rails. This token's actually backed by something. And that's sort of like the high level view of what Net is. It obviously is an ohm fork. Like I call it an ohm improvement, but it is an ohm fork. Like it is roughly based on what Olympus DAO did. I've made some changes that I think make it more sustainable in the long term from like just a simple tokenomics perspective. Like the Ohm Treasury did not profit off of its trading volume. Had that happened, it would have been way more sustainable, right? Like from just like a baseline level. Also, the entire protocol is 100% immutable. What that means is that no one can ask me, like traditionally what would happen with some of these Ohm projects that launched back then is that there'd be an outcry from the community, like do something with the Treasury, like Treasury for Treasury for buybacks, all this stuff. Our protocol is completely immutable. When you buy it, you know what's happening. There's buybacks on by default at NAV, and you can very easily calculate what the emissions are going to be based on how far the token price has drifted from NAV, and you can also know the bond schedule up ahead. Like Ohm was probably over diluting their bonds because the attention was so high and just like took in so much capital. Our protocol is a little bit different. Like I have no ownership over the protocol. I can't change anything. You're buying exactly what it is. And that goes back to a core belief of mine as well. Like code is law, right? That's kind of like a promise of building on these rails. And we sort of drifted away from that over the years, where it became like code is law maybe is bad because the teams want to have more control over the protocol. I think code is law is still good because teams have proven themselves not to be trustworthy over time. And I sort of wanted to put that trust back into the code and show people that it's actually better to buy something if you know what you're buying, and you don't have to wait on like lofty promises that never get fulfilled.
Right.
So before we get deeper into Net, I'm curious, what were your like what was your thesis behind like the meme coin super cycle? Why do you think it happened? Are you more aligned with like what Murad's thesis was?
So I have this like baseline agreement. I wouldn't call it a belief. I'd call it an agreement on the hypergamblization of society. It's an article written by Jez. I don't know if you guys have read it. He's a big guy on Twitter, but it's basically this belief that because of the, and I don't want to get too much into like economic policy, right? But because you have this wage gap, the shrinking middle class, less financial opportunities, housing is becoming less and less of a realistic dream for most people in the world to like own their house and pay mortgage rates, that sort of thing. You have people viewing their only way to get from where they are to where they want to be to gamble their way out of it. And crypto people, gambling and trading are converging into one place, which is like, if I'm going 40x long Bitcoin on Hyperliquid, I feel like I'm a trader, but I'm actually a gambler, right? And so seeking these returns led to this place where value doesn't matter. You also have this generation being brought up completely on the internet, right? They come online at a very young age. That's their world. And I guess Solana and Pump Fund and like these crypto products offered a way to monetize like how online you were and how good you were at following trends and attention. And so I understand it. and I get why it happened. And I think that you have all these different factors that played into it. I think that's sort of like why it happened, I guess. And I saw Vlad, like he posted that like RWAs and mediums on Robinhood chain, right? Like there's like two wolves.
Yeah.
And I agree with that. And so with NetNet, like I wanted to make sure that I was able to like toe that line. There's other projects that are like, no, we are a utility project and that's what we are. I think that that's a super naive assumption to think that you'll have like the same success if you don't have this like underlying meme aesthetic. And that's kind of why everything we built has been in this like 90s internet.
Right.
There's like lore behind it. There's characters, like all this stuff. So
yeah, your game products are pretty
Game
awesome.
Boy.
Yeah, they definitely have the right nostalgia touch points for sure.
Yeah, thanks. Thank you.
Yeah, and I think you're right. It's it's interesting to bring up like the whole cultural dynamics behind what do you call it? Gamification of society. I mean, it's a real thing. Hypergamblization. Yeah, and like I think I saw something recently where it's like Gen Z. I think now like it's a higher priority, like sports betting than like investing itself, as in like what Gen Z prioritizes from their financial decision making. Mm-hmm. Like that's pretty wild. That's a wild data point to kind of like soak in. And then it's like us as builders within this RWA space. If we're to kind of like follow through with what it is Vlad is kind of like signaling out there. I don't know if you watched like his speeches yesterday and stuff. He definitely is really overselling and emphasizing this ownership aspect. Like he really truly believes it's like everybody should some way, shape, or form discover their vertical of like access to ownership of equities, essentially, right? And RWAs
and tokenization of everything.
Well, yeah, but because I think it's critically important for a lot of reasons, right? It's literally if you're not involved in that, you're just kind of getting left behind economically, right? And like there's a large percentage of people that don't want to, I guess, I don't know if they don't have the access to the information to understand that, they should just be opening a brokerage account to just buy these vehicles, or it's just the act of doing that itself is just not attractive enough, whether it's just like too boring, too boomer, whatever. But it's like builders like yourself and others, I guess. Do you see that as like the task that's kind of been assigned to Robinhood ecosystem developers? It's like figure out new interesting ways to get like normies exposed to the the real hard markets of the stocks and RWAs, but not make it like that
so boomer
and unengaging, right? Is that, would you say that's like your motivation?
Yeah. So I know that is the task, and the motivation, and like that is the reason for this chain existing, and that is the underlying thesis, the core underlying thesis of like why I'm building what I'm building.
Yeah.
And like my grandfather, for example, like he would have bought like Coca-Cola stock, right? And all of his friends, the information was so much slower. They would earn steady returns, like compounding wealth, all this amazing stuff. I think that the next generation of investor, that doesn't fit with who they are as people, how their generation operates, or like what their financial goals are. And so there will be tools built that achieve the goal of ownership, and like, hey, these people will be equity owners. But what that looks like, I think, will be very, very different than maybe how like two generations before us had ownership and equity access. And then also when you combine it with all of these institutions and private finance that have sort of like front ran retail when it comes to a lot of these equities, right? Like if you're buying like the Figma IPO, let's say when it IPO'd, you're not actually early at all. You're very late. Like there's already been so many funding rounds. There's already been so much private equity money moving in and out of it. And you're actually getting dumped on by everyone who came before you. So it's like, what is the retail investor supposed to do? Are they supposed to hope that they can just compound wealth slowly by buying these equities that have already been priced way over what they should be by all of these different parties that are able to have access before them? Or are they going to open a 40x Bitcoin long on Hyperliquid? It's like, which one is more appealing to them? And so I think my task is to package owning these equities in a more fun, engaging way that fits with them, that also sort of like fits, like you said, the next. I'm not trying to save humanity, right? I'm trying to give access to equities in a more fun and exciting way. And so it's like, yeah, maybe I don't want to just buy Nvidia stock, but like one thing I'm building right now is like a blackjack game where you wager with 5x Nvidia longs. And it's like, maybe that's a way to give the Gen Z and below investing audience access to Nvidia. Is like, we have to hyper gamify it, hyper gamblify it. But at the end of the day, like, then they become Nvidia holders. And eventually we're all going to be Nvidia holders. So like, you know what I mean? So it's kind of a new way to distribute these equities in a better way, I think, at least.
Yeah, it brings up an interesting like new dynamic. Again, I think it's why it's getting a lot of builders interested in like Robinhood and RWA space, because, you know, we've been basically trying to do that with crypto all along, is like create new cool experiences. You know, we had a whole metaverse and play to earn wave. You know, it's build, you know, these digital economies, these closed looped ecosystems, you know, where people can come in, get involved, purchase some assets, or even like be rented some assets, whatever. And at the end of the day, they're accruing crypto native value, right? Typically some vapor token that eventually ends up becoming, you know, 99% what it was worth, you know, when the thing first started, right? So retail was attracted to that, obviously, but they all got basically burnt by it because it just wasn't sustainable, right? So do you think overall, like, the introduction of RWAs kind of like brings life back to those like those already prior iterations? It's like, because you can now inject RWAs into these like existing models, it makes them, for one, much more like sustainable, and for two, we'll kind of like, you know, reconvince that same demographic of participant, like, hey, this time around, through this familiar activity you've seen in the past, you know, you're not just earning a crypto token, you're actually earning, you know,
Nvidia,
a stonk. You know, it's like, do you think that's going to have like a real mind shift?
I don't know if you guys read the like article I wrote about RWPlay.
Yeah, we did.
But it was kind of like the underlying thesis of, that's like my core thesis, right? Is like, if you redo that whole like metaverse crypto gaming play to earn cycle, but you, instead of rewarding people with assets that actually will have long-term value, I think the outlook changes drastically. And then what I'm doing right now is like taking it a step further, where part of the reason that those games had such a hook too at the time was that the token was going up like 100x, 1000x at times. Like, that was like a big part of it, where it's like, oh, I can play this and the token can go up. And so that's why I'm sort of packaging these equities as calls and puts, and like high leverage calls and puts. And it's because, hey, like, your $20 that you put into this thing, it can be $200 tomorrow, and it's Apple stock. And so it's like, I'm trying to like find, and again, I think part of what I'm doing with NetNet is that a lot of it is very experimental. Like, every game that we've built so far has been fundamentally different, because I'm trying to find basically like what the right hook is to basically have escape velocity beyond the regular crypto user, right? That's like the ultimate goal. And that's how like a lot of the 2021 metaverse projects won, right? Like everyone in the Philippines was playing, what's it called? I'm blanking on the name, but
Axie?
That one game that was played during Axie, yeah. So everyone was playing that game, and like, can you have that same thing happen with some of the games we're building? Like, we'll see. That's my goal. But I'm trying to package all these games a little bit differently under the hood to see which one plays better, which one's better for our users, which one they're playing the most, and then take those learnings, apply it to future games, and then hopefully have the escape velocity we're looking for.
Yeah, so we understand everything you're saying, but I don't know if the audience is quite following. So can you, let's take a step back and go back to the relationship between the net token and the Treasury. How does all that work?
Yes, so the net token is backed by the Treasury, and what that means is that you can come to our Treasury at any time and take out of the Treasury exactly what your token is worth. Right now, the token trades at a multiple from the Treasury, and that is because the Treasury is growing. Like, it should trade at a multiple. The Treasury is growing so fast that what the Treasury will be worth is being priced into what the token is currently worth, which is not unfamiliar from how, I think I said this before, but like Apple trades like whatever 30x cash or something. I'm just making up numbers, but something like that. And so it's not unfamiliar to that, because people expect Apple will make more cash over time. Therefore, the equity will go higher, and it shouldn't trade at cash unless you really have like flat growth and no one believes that you can sort of like grow at a higher rate, right? So that's the relationship between the token and the treasury. The token emits at a really high rate because it's at a high multiple from the treasury. As the treasury grows towards where the token price is right now, the emissions would flatten. But also, I think that as the treasury grows towards the token right now, the token would go higher. And so you sort of have this like interesting relationship between treasury growth rate, emission rate, and token price. Those are like the three sort of like, it's like a triangle, right? Treasury grows fast, tokens emit at a high rate. As long as the treasury grows at a high rate than tokens are emitted, you'd expect the token price to go up.
Okay, so the mechanism to supply value to the treasury is via volume on the token and including like the activity in the games?
Yeah, so the token has a trading tax on it. That's one way. The other way is through bonds. So every epoch, this is like a fixed value. Sorry, I don't want to get too much in the weeds. Like people can definitely go on our docs and also like plug the docs into whatever AI tool you use and ask questions. It's set up to do that. But there's 3 epochs per day. Each epoch bonds refill, and there's a fixed quantity of bonds available. And what bonds are is there's a not counting the trading tax, a maximum of a 7% discount from market price that bonds can be offered at, and a fixed quantity of net is vested to people who basically deposit money directly into the treasury. So that's another way that the treasury grows, and we've seen a lot of good growth from that. I know there's a question about like our RWA sleeve as well, that someone asked you on Twitter. I saw that, so we can get into that too. So those are the ways the treasury grows. Is the games, every game we've built funnels fee money, or like, you know, all the games are structured differently, right? Like sometimes they're operate like a coin flip is operating at even EV. The Space Invaders game is like, I think 96% EV. So there's different ways that the games make money. That money that the game makes is funneled into the treasury, and then along with trading fees and bond fees. So
okay, so then what would you say the relationship between the token and the treasury? What does the treasury do to the token? Because I understand that there's like a net asset value because the treasury has a claim to the token, or the token has a claim to the treasury. And then you're taking advantage of the, you know, mimetic potential of like the current environment, because the token can trade much higher, you know, 10x, 20x NAV. So you're sort of playing both sides. But would you say that the treasury has like a different component in terms of value because it holds these hard assets versus like just holding a treasury of ETH, for example?
Yeah, so there's 2 parts of our treasury. One part of it is that we have over $1 million in a USDG that's just deposited into Morpho. That's like one leg of the treasury, and then the other leg of the treasury is these RWAs. The RWAs live outside of the actual protocol, and that's intentional. The reason for that is sort of what we're proving now, and I've kind of alluded to it as well. Like our latest product is intentionally built to be a yield-bearing product for RWAs. So I think that ultimately we're going to be able to use the RWAs that are in the treasury more effectively than just like holding Apple stock. We'll be able to use them to be backstops on some of these games, and counterparties to a lot of traders, similar to like HLP, like that vault on Hyperliquid. And then we can see the growth have a 4th leg, which is, you know, bonds, trading fees, revenue from games. The 4th leg can be yield on native assets. So can you earn like 20, 30, 40, 50% on Apple stock from some of these like high leverage games we're building? Like that's sort of what I'm trying to prove out right now by with this turbo game. And so far all the games have also been I've funded all the games so far myself. I haven't used any of the treasury assets because I want to have like a really good thesis and more testing, sort of scale up volume and make sure that like I believe in the yield before ever putting any treasury assets behind them.
Okay, yeah, that seems interesting, because what you're doing is you are creating products that people want to use, like games, for example, and you're sort of merging the idea of, instead of buying stocks, you just play the game, and if you win the game, then you're essentially accruing these like hard assets that that otherwise, you know, this individual wouldn't be going to, you know, brokerage account or Robinhood to like purchase these assets. So it's like it's like a understanding the environment, like the demographic, and then just giving them what they wanted, but in return, they're getting these hard assets, which is like a net value gain.
Yeah. I think the interesting dynamic here is like the ultimate funneling of all of this, like, these independent touch points of like new user experience or whatever into like a common shared alignment vehicle, that treasury itself, because it is a little bit different than what we've seen so far, like in iterations like index, stockbrokers. It's like everybody's kind of like collectively aligned. It's like, build these ecosystems. You could build a launch pad or whatever where people come in and kind of like, build off of what if there's like a core innovation somewhere in there. In stockbroker's case, it's Anvil, right? You could build around that. You could launch, NFT collections that can essentially earn a drip, right? So like the mechanic right now has been like earn a drip, right? But that kind of maybe dissipates a little bit too much, like the value, or like disperses it to too many like individuals as opposed to like aggregating it into a single unit. Do you think that like that is like the superpower you're kind of like bringing to market? It's like, it's a better mechanism from maybe like an optics point of view, because we're humans and we're like addicted to like growth metrics.
Yeah, number go up. Yeah.
Number go up. Yeah, that's like So do you?
Oh yeah, I mean,
do you
like
think
I said,
yeah, go
yeah.
ahead.
There's a reason that Ohm was so popular, and they went all the way up to like 4 billion market cap or whatever. Like, I think that the psychology of the underlying protocol is really, really powerful. It has a really strong hook, and there's a reason that I chose to do it this way. Like, I was an OMI back in the day, and I was in it, and I know what it's like to be in it, and it's great. Like it really is fun. It's really good at community building as well. Like we're all in this together vibe, which we've already seen. Like our Telegram is not toxic at all. Like I've never seen anything like this before in crypto. It's like the vibes are really good. Everyone wants to help in any way that they can. We almost have this like a commune vibe going on because we all own the treasury together, and like we really do. Like literally, you can like check the smart contracts. Like we do own the treasury together. And so, yeah, it's super, super powerful, right? And I'm really thankful to the community. Like they put a lot of trust in me to deliver some of these like lofty promises that I've made. I'm doing my best so far, hopefully, to show them that like I'm serious, which again, a lot of trust has eroded over the years in builders in this space, looking for like to make a quick buck. And so I'm trying to show them that they can believe in me and sort of like what we're building. And then, yeah, as far as like the slow drip thing goes that you talked about, like, and again, no shade to any other projects that are trying to like find an angle here. Like I think it's really cool, and a big part of what I want to do is bring more people in to build in the space. And we can talk about more about kind of like SDK access for some of the stuff we're building. But I think it's just kind of boring. Like this stuff needs to be fun and has to be interesting to get more people to want to come back on chain that maybe left. And I don't think that like earning a slow drip of Nvidia stock is like all that interesting or fun. I understand that it's a cool protocol and stuff, but like I think there's so much more we can do, right? Like sort of like it. Have you guys followed the Turbo product that we released recently?
Yeah, we saw that it sold out all basically instantly, right? Very quickly.
Yeah, and then it's sold out again today without me saying anything. So there's like a high demand for these cards that are 25x longs on Nvidia and Apple, right? Like there just appears to be a high demand. This is like a primitive that we can do so much more with. Like you can package a poly market position into a playable asset. Like what can you do with that? How does it relate to like sports bettors? Like there's all these like endless possibilities. And the reason that you're able to do that is because of the crypto rails that are set up for you, where you can have these transferable assets. It's very easy to transfer stuff to one another. You can package things. You can have on-chain randomness. Like there's all these different elements for builders to come use. Where you can do some of like the coolest stuff that's never been done before, right? Like, have you ever been able to like play a game, like play Madden, let's say, and then if you win the game, you actually win a $5 like Patriots win the Super Bowl future? Like that's never been something that's like happened before. Right. But I think because of these rails and also like what we're building, that's something that can now become a reality. And I think that I'm almost certain that that's where things are headed. And you've already seen this a lot with some of the gotcha companies that are building on chain. And like I think those projects are super interesting, right? They're building opening packs on crypto rails. I think you're going to see that evolve into more like serious companies wanting to use these cards for rewards and that sort of thing. And so I think that the same will be true for what we're building. Like it's just a really good hook and a really cool game token.
Yeah, I totally agree. I'm not sure if you're referencing FWA in any way when you bring up like the whole on-chain gotcha thing.
Yeah.
Or collector crypt, obviously big deal, tons of revenue there. But yeah, I'm more interested in like the novel, decentralized mechanisms around gotcha, which FWA is kind of like, struck a nerve there as well. And yeah, just through understanding that mechanism and like its application to, something like it's essentially like a single machine, right? It's a claw machine or whatever.
Yeah.
You put in some money and you'll get something of higher value. In most cases, it's slightly less, whatever. But that's the game, right? But the fundamental breakthrough there, it's like the understanding that you can essentially like port all this like RWA value on chain and like have ownership of that and be the provisioners of like what it is that's up for grabs in these different like little gamified loops, right? So you're kind of through things like Turbo, and I'm sure you got other product ideas in mind. You're kind of envisioning like the supply generation of like what is up for grabs in these new game loops, right? But you also need new game developers to kind of come in and build these new game loops. So like these new slot machines, right? These new casino floors, however you want to say it. I don't know if you want to use those exact words, but essentially that's
experiences. Man.
Yeah, whatever. Yeah.
Yeah. But
I am. I haven't slept in like five weeks, so I can't keep being the only one building these games, right? Like I need to get more developers to build on our rails, and that's like one of the highest priorities that I have right now. Outside of just like building. So.
Yeah. So how do you plan on achieving that?
So again, like what's really cool about something like Turbo is that it's just a primitive. They're smart contracts that anyone could build onto. And so the way that I'm thinking about achieving this is building API layers that are on top of like what's going on chain, so that anyone can come and basically call a few methods to either like load an asset into something they're building, or pull something, or even mint something as well. So right now anyone could use the primitive to mint a series, and right now the series are based on Rialto tokenized stocks, but in the future we could extend the primitive so that that's not a restriction, and that it could basically be a package of anything. Like you could imagine a Turbo card that's representative of like the Fortnite currency or something like that. So I think that there is a lot still to do, but the number one thing is to just build like a really good developer interface for people to use and package it. And so like I've been getting some feedback already, and I'm definitely gonna share with you guys as well about like what's easy, what's hard, how many API keys do I need to get in order to use this from like the third-party providers that I'm using. And so trying to just like connect all these dots before having a public launch is going to be really key to make sure that it actually is as easy as I think it can be.
Yeah, we're actually looking forward to getting that SDK because we want to get our hands on it, because we're in the middle of developing our own project for Robinhood, and we want to bring back the gaming aspect of it. And so bringing this ability to have like players win these like 25x longs, like I feel like that's an interesting component that we haven't had like a chance to play with.
Yeah, I mean, yeah, you definitely want to see what it is. So to boil it down, like what would this like technical framework or developer SDK like really enable? Like if you were to like, break it down to like 1, 2, 3 killer touch points for developers like ourselves, like how would we utilize it?
So there's a few things that I think it would really help you guys with. Number one is these are just 1155s under the hood. So you could take a series and offer them to your users in any way that you see fit. So you would still be the ones that are building the game hook into it. But normally like the game prize, let's say that you have an in-game currency, or like it's like a loot box style game, anything like that, you can now load your game box in with these 1155s. And we provide you the methods as well to help your users handle the like cash outflow, the like if they want to just like natively purchase stuff, the native purchase flow. We'll also open up like a builder code type format, which so that you will earn revenue on any of these cards that your users purchase effectively. And so that is sort of like the big three, I'd say. Then the layer that's on top of it is, and this is going to be like the V2 of the developer experience. It will be allowing you to extend our primitive and to create turbo cards, create series, mint them yourselves for whatever assets you see fit, right? And so like all that the turbo card is under the hood is it's an oracle and a pricing mechanism and a K factor, which is like a how far the price of the feed is willing to go from where the series was created, right? So you could basically do that with anything. It doesn't have to be a tokenized stock. I think the tokenized stock angle is really cool, but it could be anything, right? Like you could pull in a polymarket oracle and do something like that, like I've alluded to before, or you could do something with some in-game hook that you have, right? Like if you're tracking progress in a game, you could have people like have leverage long exposure to how far they're progressing in the game and reward them based on that. So, you know, cool. And what I'll say is that like, I know for a fact that I don't know at all, like how people will want to use these and what crazy stuff they'll come up with.
Right.
I have an idea of like what I think the easiest things to do will be, but like, I definitely am keen to work with people like you guys and some of the other teams I've been talking to, you know, dream as far as they want to dream and build the coolest stuff imaginable. And ultimately that will just be good for the NetNet holders as well. So yeah.
Yeah. So how do you actually tie, let's say you get, you know, 4 developers and they make a game and, you know, they're making traction. How does it tie back to the net token itself?
Yeah. So let's say that like you have a game, I'll just use the series as they currently exist. Let's say that you have some sort of game or, you know, whatever mini game, something that is giving your users turbo cards. Every turbo card costs a fee to mint. The developer of the game would be cut into the fee, and then the NetNet Treasury would be cut into the fee.
I see.
Gotcha.
So does that make sense?
Yeah, absolutely.
That's pretty much how I'd expect it to kind of roll forward. And yeah, I mean, that's pretty powerful because you're setting like a framework and a new developer primitive to kind of expand around, which is, you know, bullish from our perspective. Every time we're trying to find like new things in crypto, we're always looking for not just like something that brings in, I don't know, like a new narrative or a new trend, but it's something that or they bring that in, but they understand it's like the real unlock is creating like a mania around these things. And in order to do that, you've got to onboard more developers to kind of like, you know, build on top of that. Because like you said, you can't really predict where that's going to head, right? Yeah. Once you set that new primitive into motion, you know, you can only do so much. Like right now, you've produced quite a lot of games, and I think you've generated like 6-figure and like revenue through them. It's pretty cool, but I'm pretty sure someone out there is going to like smoke you, like in their abilities to make a game or to make whatever.
Yeah. Oh, for sure. My distribution right now is like the token holders, right? Yeah. And so like my dream is that one day that people are trading these turbo cards that have no idea what NetNet even is, or have any idea that like it's called a turbo card. Like that would be the dream for me, is like the treasury is earning revenue and the consumer has no idea that that's even happening. So that, you know, that's kind of like the long-term view of how I think we scale and how I think we continue to win. But for right now, yeah, like anyone who's playing our games knows what NetNet is. They're familiar with the protocol. They probably have bought the token. I'm hoping we can sort of like start to see examples of that not necessarily being the case as we onboard more developers.
Yeah. I had a question going back just a little bit. You mentioned that you had $1 million in USDG and it's being used in Morpho. So I had the question is there's a treasury with RWAs in it. Is there any use case for that treasury holding a bunch of RWAs that you could put into some DeFi protocol to also get a yield?
Yeah, so we've been approached by quite a few people that are like building stuff on Robinhood chain, but my philosophy right now is that I think that we're capable of building the yield-bearing products that we want to use the treasury for instead of going to like a third party. So like turbo cards right now, the call market when you mint a new series has to be backed by whatever the multiple is. So like you have to have enough cover to cover these longs, right? In case they all end up like wanting to cash out and profit. And so you have to basically like put Apple stock behind them in order for it to be able to be mintable. And so what I'm measuring right now is like how much fees does the lender earn and how much risk are they taking on relative to the fees that they're earning. in order to prove that like, hey, we could actually take all the Treasury's Apple, put it behind turbo cards, increase our scale by like 10x, and then see what the yields could be at that scale as well. But that's a little bit further away. Like I'm very careful to be careful with these assets that the Treasury owns.
Right.
So.
Yeah.
So what are your views on, if all this pans out and does very well, that Treasury, could be sitting at hundreds of millions or maybe billions in the future worth of value, not just USDG, but like equity value. Are you still going to be running the show by yourself in that future scenario? Or do you think there's some much more DAO reliance there, right? Because you're going to have some very super valuable holders at that point. I'm sure they're going to want to say as far as like, how do we manage this beast that we've kind of collectively put together, right? And I just want to throw this in for my own curiosity. Do you think AI has any kind of play in that decision-making process? Because I've always been wondering, like, who's gonna give AI a shot
at DAOs.
at DAO management, right? Do you have any views on that?
Yeah. I think that at that scale, like, what I'll say about AI is like, yes, like AI is permeating all things that we do, right? So it would be pretty foolish of me to say like, let's say that we had like that huge of a treasury, like in the multiple Bs. It would be pretty naive of me to say like we wouldn't have any sort of like automated tooling to help us with treasury management. I wouldn't like hand over the keys to an agent of that size. Obviously, if we were at that size, like
that'd be pretty cool though.
Yeah. The structure would be very, very different. Like we would definitely have to bring on people who are proper asset managers to sort of like help us deal with that amount of size. And also like, we'd have to probably hold assets like on both sides of the crypto fence at that point too. So, I don't know. I thought about that a little bit, but like I said, I don't really have a roadmap. I'm sort of just, we're building for today. Cool. So
yeah, I think that's the right answer.
It actually kind of reminds me of the cold card hack that occurred. A lot of people are saying that they're holding their Bitcoin in ETFs just to kind of mitigate, compromise like that. So if you're holding like $1 billion worth of assets in like a crypto vault, you probably want to move some of those assets outside of the crypto vault just to mitigate a disaster. So then that goes to that goes to the questions like, since your token holders have a claim to those treasury assets, how do you like manage like the responsibility of that treasury ownership with like the responsibility of like making sure that the claims are there, even though they might be, outside of the crypto fence?
Yeah. So that's a good question. So the USDG that's in the treasury is part of the Immutable protocol that cannot move. So I'll just say that first, like whatever's in there will always be in there unless a net holder pulls it out. That's the only way it can move. As far as the RWA part of it goes, I mean, that will be something we'll have to like if the treasury is operating at like 9-10 figures in size, we'll have to figure something out. Like we'll figure something out there. But it becomes a much less like, I'm obviously like the team. I'm a solo founder. Like I would not feel comfortable like operating that size alone. So we'd bring more people in, way more opinions. Work much closer with Robinhood as well, to make sure that we're custodying things in the right way and all that good stuff.
There was a component to the whole ecosystem you mentioned earlier about the sleeve. There's about close to $500,000 in RWAs where it's up to the protocol to decide how to kind of use those resources to kind of prop up one thing or another if one thing starts to fail. So how would you describe that? And like, what is like the ownership side for net token holders in relation to that particular asset?
Yeah, for sure. So, like I said, the protocol is immutable. And so the only way to let us be able to use these assets in more productive ways than just holding them was going to be to hold them outside of the protocol. And also the protocol only knows how to distribute cash. It doesn't know how to distribute RWAs. So what I'll say is the net holders do own these RWAs. And at the same time, like we will try to use them in more effective ways. And those effective ways are ways that will help the protocol earn more cash. Like that's kind of the goal. So I've said this before to people, but like the two goals that I have right now are, can we build products that increase the amount of cash in the treasury? And can we build products that help increase the USDG to NAV price? So those are kind of like the two things that I'm really thinking about. Like the no loss lottery that we have, it doesn't involve RWAs, but anytime someone joins the lottery, it's like a net market buy under the hood. We've sort of like abstracted away all of the net from the product, and we've already seen some a lot of people who don't actually hold any net buying their first net through the lottery, and that directly helps the like price of net, right? More buys helps the price. So yeah, those are kind of like the two angles that we're building under. Lately, it's been a lot of RWA focus, and again, that's because the market is kind of telling us like we're doing the right thing by building in this lane, and so we're just going to keep hammering that for right now.
Okay. All right. So we have about a few more minutes. I know you have a hard stop here.
Yeah.
So what are the biggest things that are happening right now for Net that might be some alpha that we could share once this video is released?
Yeah. Yeah, for sure. Alpha's good. So I mentioned this earlier, but internally we have a few games running using Turbo as like proof of concept. Externally, there's right now are two teams that have way more distribution than us that are integrating Turbo into their products. I can't really speak on like what those teams are yet, but that's currently ongoing as we sort of like iron out what the SDK developer experience looks like. And then the third thing, what can I say about this? I guess I'll say that Robinhood has a lot of cool offerings in the option space to their retail audience, and so trying to find ways to maybe cater some of the product that we offer to align more closely with some of the options that they offer is something that we're really thinking about hard, and we think could be like a really big unlock for builders on Robinhood chain, and just like for our team as well.
Is that going to be like through APIs via Robinhood, or like what's the mechanism?
Yeah, we're still ironing that out, exactly what that looks like.
Okay.
But there is like a high retail usage of options on Robinhood's apps. And so we're also building retail facing options tooling. And so there is like mutual interest there.
I see. So you're basically saying that you're working with Robinhood, right?
I don't know. You guys, I didn't say that, but
no, don't disclose anything you're not supposed to. But yeah, that's really cool.
Yeah.
I know that Robinhood, they're trying really hard to make sure that these people experimenting in Robinhood chain themselves, they have access to everything that they can within reason.
Yeah.
To start experimenting and see how the next generation, they're going to be onboarded to this like ecosystem of RWAs and like stocks in general. So that's really good to see from Robinhood that they're kind of open to that stuff.
Yeah, I mean it's
like they listed Cash Cat, right, and like that was a huge moment. Yeah. And then a lot of people like sort of came to me and were like, "When's Robinhood gonna like list Net?" My response to that is like, that would obviously be cool. What I think is maybe more cool are like, is there synergy between the products that we're building and can we expose them to Robinhood users? I think that is long-term more beneficial to NetNet holders than like, will Robinhood list the token?
Yeah, for sure.
Which would also be cool. I'm not saying that's never gonna happen, but I'm just saying like, for me personally, I think that if we're able to have distribution on some of these rails that we're building that drive revenue to the treasury, that almost, it's maybe a more fundamental analysis view, but definitely a more sustainable long-term outlook for the token in general.
Yeah. All right. I know you got a hard stop here in the next minute. Again, really appreciate you for joining us today. This has been super interesting. I guess how do people get in contact with you? Do you have a Telegram link somewhere on your Twitter profile, things like that?
Yeah. There's a Telegram link at the bottom of the site. You can definitely join that and reach out to me through there. I'm always looking for more ideas, opinions, thoughts, and yeah. I guess the last thing I'll end with is just I'm really thankful to the community and the NetNet holders and stakers. Like this project really wouldn't be possible without all of them and their belief in what we're doing. And so I just want to shout them out. Like it really is a great community. if you haven't checked it out, even if you want to come to Telegram without buying the token, definitely do that. And you'll just see like the vibes are very different than probably other projects that you've experienced before.
Yeah, absolutely. All right, ALDunlap, I appreciate it again for joining us.
Yeah, once we get more into the weeds of, again, like, the developer activation side of things, I think, that's going to obviously deeply interest us, and it's probably going to be the source of a lot of our
communications
in future content on this channel, I imagine.
Yeah.
Because like I said, that's going to introduce a lot of new interesting experimentation around what you're already kind of up to, right? And typically those are the types of things we like to kind of cover. So if you can just, inform us as far as like when all that's like,
accessible,
ready to go. And then, excited to see where this kind of all evolves moving forward, because, this is, I think you're pretty much locked into exactly why everybody sees Robinhood as like that next great opportunity, because it does have like a direct access point to a pretty large demographic of people who, it shouldn't take too much activation energy for them to like pique their curiosity to, migrate into our direction. It's just we have to do the right stuff in order for them for this experience to become palatable again for them. So kudos to you.
100%.
And we'll keep tracking the progress moving forward.
Yeah, absolutely. And for everyone else, I appreciate you guys for watching. All the links will be in the description. Again, shout out to ALDunlap and the NetNet crew and the community there. And we will catch you in the next episode.